Hey everyone, this is John Fennick, CEO of Fennick Consulting, and with me today as my guest is CEO of Trillion Energy. The ticker in Canada is TCF. The ticker in the US is TCFF. And with us today is Art Halloran. Art, welcome to the show.
Thank you very much, John. Pleasure to be here.
So, you and I met last summer through a reference of someone who has worked with me for many years, and I was very impressed with the story back in July. And then when you guys had that huge discovery right near some of your claims, they're adjacent to where you are in the Black Sea, it got me really interested. Can you talk a little bit about first that discovery and kind of what it meant for the potential for Trillion?
Yes, okay. So the TPAO, the Turkish government petroleum company, found the largest gas discovery in Europe in the last 30 years. It's about 14 TCF. It's north of our block. It's also in the Black Sea. And so when they find a large deposit like that, it tells us there's a lot more gas has been generated and thicker source rocks, and it makes the area a lot more prospective. And so we're going to be looking for deeper targets and also other areas that are contiguous to our block, but we can get them for production to look for potential gas charging.
Okay. So let's just jump right into some of the numbers. You were a guest on Bill Power's Mining Stock Education show on February 24th, and I thought you did a really nice job on that and explaining the story. But I wanted to jump a little further into what the free cash flow might look like, 12, 18, 24 months from now, because I think investors are missing that.
Yeah, okay. So there's another aspect of our project also is that because we are drilling off existing platforms, we drill the well, we complete the well, and it's on production within about 45 days after recompleting and drilling. And then we get our first revenue about another, 30 to 45 days. So it's very quick cash flow. So for the first four unproduced pools, we'll get within the 6 months or so about 1.4 to 1.8 million US per month. And then with the continuing drilling over the next 6 or so months with the development locations, we'll end up doubling that to, getting up to 4 to 5 million dollars US per month. And at the same time, then, so that's about 12 to 14 months down the road, we'll have de-risked some of the other locations, and we'll continue to drill based on our cash flow. So you're looking at about 4 to 5 million dollars a month free cash flow.
And that 4 to 5 million a month is how many months out? 18 months?
Yeah, it will be up to 18 months. Yeah.
Okay.
But it's also, when we talk about offshore, a lot of people think that it's a long time lag between drilling, completing, and getting the cash flow. But for us, it's almost instantaneous because we're drilling off existing platforms and all our infrastructure is in place.
Very interesting. So along those lines, who is buying your product? You don't have to name the company, but could you kind of explain to us, who's on the other side of the transaction? Is that relationship stable?
Yeah, it is very stable. We've had that contract for about 3 years. It is a large industrial user of the natural gas. And not only do they buy our gas, they buy our partner's gas from the same field.
So in terms of, we've talked a little bit about the balance sheet and about free cash flow. Let's talk about the share structure, please. So, you're looking at, according to the website, about 125 million shares outstanding. Would that be accurate?
That's correct. Yeah, that's accurate.
Okay. And let's talk about the competition a little bit as well. I mean, relative to some of the names that I've seen out there, like NG Energy or Touchstone Exploration, how do their share structures look, number one, versus yours? Or more importantly, number two, how do the market caps look on those two companies?
Yeah, so in our share structures, we have about insiders own about 7 to 8% of the shares, right? And then when you compare Trillion to NG Energy, they have a net like a market cap of 125 million dollars US and a share value of about 92 cents, but they have half the gas value as we have, right? And then TXP in Trinidad, they have a value of about 491 million US, and their share value is about 235, but they have $390 million worth of gas. But if you look at ours, we have 157, which are just a 2P and development risk reserves. It's 157 million. We have a market cap of 10 million, and our shares are at 13 cents. So we're very undervalued compared to those comparables.
Okay. And shares being 13 cents Canadian, about 11 and point whatever cents US, correct?
That's correct. Yeah.
Okay. And then when you look at something like NG, that you just mentioned something about half the reserves. Can you elaborate a little bit about on that? What that means?
Yeah. So they have again the same category reserves. They have about $67 million worth of reserves, NPV 10, whereas we have 157 and PV 10, right?
So do you think the disconnect in the market simply could be that, Trillion just hasn't done as much marketing, or, just, what do you, as CEO, what do you attribute that to?
Yeah. So there's two points to it. One is we really haven't got our message out, like I said in the other interview, but at the same time, we've been waiting to get all our ducks in a row to be able to, hit the ground running once we feel we're ready for it. And so now we are ready, and we think we can go. And so now we're getting the message out, and you can see what's happened in the last few days with our shares.
Absolutely. And I would encourage listeners to take a look at NG. The ticker in the US is GASXF, Gas XF. And just take a look at that potential. That's what got my attention here recently to put some more money to work, because I believe in what you're saying, Art, that the stock is undervalued, and sometimes you don't really need a reason. You just have to understand that the market is sometimes inefficient, right? So
yeah, that's right.
I think you guys represent tremendous value, and in full disclosure, you're my largest holding now in my energy fund. So last question here before we wrap up is, what are some of the catalysts that you see outside of the free cash flow story that you described, happening over the next number of months? I heard on Bill's interview that you are looking to raise some money, and I think that would probably be another springboard for the stock.
Right now, we have a $10 million offer for the equity, and so that is there for sure. We need $20 million for our 49%, and our partner will come up with the rest. We're not taking that $10 million at the moment because we feel the shares are too undervalued.
Right.
But we're also looking at like a drilling contract with two very large service drilling rig companies. And it will be kind of like a pseudo debt, and that they'll end up taking payment in the future from our revenue. The reason why they're even entertaining it is they know that our reserves are there for 100% sure. So they feel no risk in it. And we're just in the process of fine-tuning that. So we have that avenue. And we also are looking at a debt royalty kind of instrument. So we have the money lined up and so on. We're just in the process of fine-tuning it, and then we'll enact it.
So if I'm hearing correctly, you've got a $10 million offer that you're not taking at the moment, but you've got other offers out there that can complement that or supersede that.
That's correct. So what we want to do is have as little equity raise as possible. So potentially we might be able to get a debt component and the rig payment plan that we end up not having to do an equity raise.
Well, lastly, two things. One is I think the average U.S. investor doesn't understand that in Turkey and some other parts of the world, the price of natural gas is way different than it is here in the U.S. So, can you talk a little bit about that and how that works? How does that work to the bottom or top line of the company?
Yeah, so Turkey gets about 99% of their gas from out of country, and a lot of it comes from Russia. And you're looking at $6 to $7 an MCF. And we're domestic producers, but we get exactly the same price that they pay for gas they bring in. So our value is $6 to $7 an MCF. So it makes these projects very cash positive.
Sure. Yeah. Vastly different prices than here in the States.
Yeah, it is. Yeah. And it's been like that for 5-6 years in Turkey. It's been above $7. And even with the COVID crash, it just dipped below, $5 for just like a month. And we're back up to over $6. Right. And we project we'll be into the $7 range here again pretty quickly.
Have you ever done some work? And if you haven't, that's okay. Maybe we can, revisit this in a future interview. But when you look at, per dollar, raise in an MCF, like from 6 to 7, what does that mean to your bottom line?
That's a good question. I know that we can make money at even $2.35.
$2.35. Okay. Well, that's really interesting.
Yeah.
Because we're not going to see those prices.
No, you won't see them there. No, there's no way.
Yeah. I think I personally put out a note today saying that I think the natural gas stocks look pretty compelling and that we've been in them for a few months because the chart looks beautiful. When you look at the large cap names, and I think much like you saw in gold, silver, copper, that'll just start to drip down to the small and microcap names like yours eventually. So that's why, we're very bullish on your stock. And in full disclosure, we put out a price target of 33 cents US and another target of 39.5 cents US just today on TCFF. So, we think there's a lot of value in the shares.
Yeah, there is a lot of value in the shares. I mean, just from the 2P and the development prospects, it's like I said, is worth $1.25. That's our value. And
$1.25 US or Canadian?
US. It's US. Yeah.
US. Okay. Yeah. Well, maybe I should revisit my.
Yeah. No. And then, but like you say, you're going to start seeing a lot of movement the minute we have a news release saying that we've secured this funding and this funding and the rig contract, which is going to happen here fairly quickly. So one of the rigs that we just found out we can get it. It's available in April, but we probably won't get all the consumables and so on until towards like August or in that range, and we'll be spudding, and then we'll get cash flow a month later from the first well.
Well, I really appreciate the update, Art, and can you provide your email address, or is that in the deck?
Yeah, I can provide it right now. It's also in the deck, but it's ARTH@trillionenergy.com.
ARTH@trillionenergy.com.
Yep. And then my phone number, which is my own cell phone, is 250-996-4211. So 250-996-4211.
Great. And you're based on the West Coast, correct?
That's correct. So no 8 a.m. Eastern Standard Time phones.
That was my only softball the entire interview. So I really appreciate the time, Art. And, we've been shareholders since last July, as I mentioned. And, as a value manager, I think you provide, a lot of value here in an interesting sector. So thanks again for the time. And for more information, if you want to check out fennickconsulting.com, we'd be happy to direct any questions for you to Art and his team.
Okay. Thank you very much.
Thank you. Have a good one.
Bye.